Welcome to BigONE Weekly News Update. I'm Sophia. Crypto markets extended their recovery last week as Bitcoin and major digital assets gained momentum. But the next phase of the market may depend heavily on upcoming policy decisions. With the Federal Reserve meeting, crypto regulation developments, and inflation data all arriving at a critical moment, investors are preparing for increased volatility. Crypto market continues its recovery. Bitcoin rose approximately 4.6% last week, closing near $65,100, while Ethereum gained around 7% to reach roughly $1,950. Solana also advanced about 3.6% to $76. Meanwhile, HYPE remained under pressure, falling for a third consecutive week as large holders continued selling, pushing the token below $60. Despite the crypto rebound, broader risk markets remained cautious. U.S. equities weakened during earnings season, with the S&P 500 falling 0.61% for the week. Semiconductor weakness, driven partly by continued deleveraging in South Korea, pressured technology stocks. The Nasdaq recorded its third straight decline, while oil prices dropped sharply after U.S.-Iran tensions eased. Clarity Act faces final regulatory test. Crypto regulation has become one of the market's biggest potential catalysts. The U.S. Clarity Act entered its final legislative stage after the Senate released a consolidated version of the bill, combining previous market structure proposals with additional provisions covering ethics restrictions, enforcement rules, and amendments to the Genius Act. However, political challenges remain. Democratic senators currently oppose the draft, leaving the bill short of the 60 votes needed to overcome a filibuster. With lawmakers approaching the August recess, the practical window for progress is narrowing, and market expectations for the bill becoming law in 2026 have fallen to around 30%. Fed meeting becomes the biggest market catalyst. The Federal Reserve's July meeting is expected to be the most important event of the week. Markets are pricing in roughly a 40% probability of a rate hike at the meeting, with expectations for additional increases later this year. Historically, Bitcoin has often struggled following Fed meetings, falling after 8 of the past 9 FOMC decisions, with an average one-week decline of around 10%. The key level to watch is $61,000. A sharp post-FOMC sell-off that breaks this support could raise concerns about another test of cycle lows. However, historical patterns are not guaranteed, as Bitcoin rallied after the May Fed meeting despite previous trends. Bitcoin rally driven more by short covering than new leverage. While Bitcoin's recovery has improved sentiment, the underlying market structure remains cautious. The recent strength appears to be driven largely by traders closing short positions and reducing hedges rather than aggressive new leverage entering the market. Options markets show reduced downside protection demand, while perpetual funding rates have remained below neutral over the past month. This suggests the rally has been supported by short covering rather than a full return of speculative demand, making the move more fragile than a liquidity-driven expansion. Major macro events ahead. Markets are entering a critical week filled with major catalysts. Investors will monitor the Federal Reserve interest rate decision, Bank of Japan and Bank of England policy meetings, US PCE inflation data, earnings from major technology companies, further developments surrounding the Clarity Act. Conclusion: Bitcoin's recent rebound has restored optimism, but the market now faces a series of major policy tests. Regulatory progress, Fed policy, and macroeconomic data will determine whether the current recovery develops into a stronger trend or fades into another period of consolidation. For now, Bitcoin remains in a critical waiting phase, supported by improving sentiment but still vulnerable to policy-driven volatility. The next few weeks could define the direction of the next major crypto move. Join BigONE today and take advantage of the growing cryptocurrency market.